I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Arnaud Salamon, the CEO of MtPelerin. Welcome to the show, Arnaud. It's a pleasure to have you on today.
Thank you. Yeah, it's a pleasure. The pleasure is mine.
You're very welcome. Let's talk about MtPelerin. Now, your team is creating a bank for the new economy. What does that really mean?
Yeah, so we're creating a digital investment bank here in Geneva, which is slightly different in the way we want to operate and conduct the business, right? So it's a full reserve. First of all, it's a full reserve type of bank. We want to conduct the business in the form of marketplace, where basically the bank is not the sole counterparty for each and every product you might want to buy and consume. And of course, we leverage the blockchain technology for tokenization, and we bring the entire balance sheet of the bank on chain in the form of smart contracts. You'll see it's interesting.
Wow. So will users have access to traditional banking services as well? Or how does it specifically differentiate? Is it none of those regular services or a hybrid mix?
No, it's going to be like a very traditional type of bank. We're not building a crypto bank per se, right? So we're really building a traditional digital bank, online bank, if you want. People will have access to 30 different accounts in 30 different currencies. So of course, it's going to be multi-currency from day one. You would have dedicated IBANs for each of those currencies. We'd have a master IBAN to collect pretty much any currency, and that does the allocation to the sub-IBANs on the fly. A single MasterCard for you to pay and consume, and debit the proper account depending on where you are. So if you're in Berlin, it will debit the euro account. If you're in London, it will debit the pound account, etc. So it's a very traditional type of bank account per se. Now, of course, we will enrich the ecosystem with different marketplaces where you can buy and consume different type of products, banking products.
Mm-hmm. Very interesting. And what kind of banking products will you be using?
Yeah, so basically the first, of course, the traditional ones, yeah, so currency exchange, loans, etc. But we will, of course, offer investment products on top. And we will offer the opportunity for pretty much any SME to come and leverage the tokenization to raise money or to sell their equity or bonds directly to the public.
Interesting. Now, I've read a little bit about MtPelerin, and I saw that you guys are focused on the democratization of investment banking. Can you explain a little bit about how the investment banking is evolving towards democratization, and how does that affect business moving forward?
Yeah. If you look at it today, most of the products that you can buy and trade on the stock exchange are reserved to, let's say, high-level bankers, investment bankers, traders, etc. The idea also of tokenization is that once you're a bank, you can actually back to back, you can incorporate those products into tokens that pretty much anyone can buy in fraction of $5 or €5. And that's really an opportunity for anyone to participate in this economy, but as well as having an impact locally, right? So, you would have a cursor that you can drag, right? So depending on if you want to have a local impact or a global impact. And look at it. If you love the pizzeria down there, you love it. You eat almost twice a week there, and somehow they want to open a new one across the street or in a new area of the city. Well, you will have the opportunity to participate with, $50, $100, etc., because he would be able to crowdfund through the tokenization of its equity and get directly his customers to participate in his adventure.
Interesting. And do you see traditional banks adopting this movement towards democratization or offering some of these different types of services? Or with MtPelerin, as you guys have really started from scratch, with these new models incorporated, is it that much easier? And will the traditional, competitors be easily able to compete with the services that you're offering?
Yeah, of course. This is a general trend, right? So there is a general trend here, and we clearly see, at least here in Geneva, that a lot of banks actually want to get into this movement. So they contact us in order to develop new product, new offers. The thing is that when you start with a legacy, you never really change completely. So the idea is more for them to actually have new offers, have new services on the side, rather than radically changing their business model. I believe that we will see more and more competition going towards that, simply because that's what people want.
Mm-hmm. And can you speak a little bit about your full reserve banking and the difference between full reserve and fractional reserve banking for the end users?
Sure. Yeah. So basically, full reserve, it means what it means, right? So it means that we will never ever risk people's money. We will never loan out people's deposit to someone else. We will never reinvest it on the market or gamble it on the market. We will refuse to ourselves to leverage the balance sheet of the bank. And therefore, we will never ever be subject to bank run. Yeah. And that's very important. If 100% of the clients wants their money back at the same time, we should be able to deliver it, right? I mean, most people believe that the crisis of 2008 is over, but the reality, if you actually look at it, how did we solve it? We didn't. What we did is that we lowered down the interest rate and to repay the previous debt, and we created new one. And now the bubble is growing, way bigger than it used to be in 2008. And when things will go bad at some point, we want to be like pretty much the only bank that is not impacted at all, simply because we are not invested on the market. And that's very important because people now are actually buying themselves what they want to buy, meaning that they buy the risk. Yeah? If they invest into this pizzeria that I was mentioning before, they take the risk of buying equity into it. And of course, they get the yield in return. And whatever investment product they want to buy, at least they know what kind of risk they are taking. But if they want to remain fully liquid on their bank account, they know that there is absolutely zero risk for them.
Mm-hmm. Very well. And are there other democratized investment banks that are popping up in Switzerland or in the surrounding areas? And how do you deal with that competition?
No, today we don't see that many banks popping up. The general trend is pretty much the opposite. We see more like consolidation of banks. Simply because the regulatory cost is quite high, and if you don't have the sufficient asset under management, it's becoming hard to actually survive. In the blockchain world, of course, where there is two other projects in Switzerland to create banks, it's called SEBA and Signum. Competition is great. It means that it validates actually the market. We believe it's healthy. We're slightly different in the philosophy. Of course, we're not, again, a crypto bank. We really want to leverage the blockchain technology to bring the entire balance sheet on chain. So that's a very different way of approaching it.
Mm-hmm. And you're not a crypto bank, but you're trying to bring balances on chain. Now, can you talk a little bit about the blockchain part of that and if there are cryptocurrency services as well?
Yeah, sure. So basically, of course, we start with the liability side of the balance sheet, right? So the people's deposit, the euro, the dollar, the Swiss franc, etc., etc. Every time you deposit 1,000 euro into the bank account, what we do is that we issue on-chain 1,000 euro in the form of ERC20 token. Those tokens are obviously in a wallet that is controlled by the bank, so that anyone can use it, even your grandmother. But now, when you will be at the point to make a payment out, you would have two options. Either you pay to the legacy payment route, SWIFT, SEPA, ACH in the US, etc., etc. In this case, we redeem on-chain the tokens. We deliver the money to the correspondent bank to pay your beneficiary. But you will also have the options to pay to an address rather than an IBAN, and therefore the token will move from a wallet that is controlled by the bank to a wallet that is controlled by you. Here we had like a compliance aspect to tackle, so we created something that we call the bridge protocol in order to make sure that compliance is always enforced, even though it's on-chain in the form of token. But that's only for the liability side. And on the asset side of the balance sheet, this is where it's becoming super interesting, because all banking assets, are contracts. And what we do is that we incorporate those contracts into smart contracts, and we automate few of its functions, the cash flow structure and the ownership structure. So, if you want an example, a loan is a contractual agreement, right, that you have between you and the bank. It's an asset for the bank, of course. It yields because, every month you pay them back interest. But it's a very illiquid asset for the bank. So that means that if they want to sell it to some other banks, they can. But you, as a customer, you don't change counterparty. That means they have to stay in the loop every month. They continue collecting on your side. So it's becoming costly for them to actually issue such a product on the market if they want to issue it in the form of a single loan. So of course they pile it up in bigger product, etc., etc. But now if you replace that with a smart contract, you as a customer, you pay back to an address rather than paying back to an IBAN every month. That doesn't change anything. And then it can the asset, the ownership can move. It can be bank A on day one, bank B on day two. And because it's represented by token, it can also be collectively owned by the crowd in a fraction of $5, €5.
Interesting. And because you've involved these smart contracts and as well are doing a full reserve banking model, the bank isn't able to make money on that money that they're holding, or maybe not as much. Is that a problem for the business model? You really have to shift the business model from traditional banks who used to make money on fractional reserve banking to now a new model. So what does the business model look like for you guys now?
Yeah, you're totally right. So that's really the core of what we do. So we're not a credit-based business model that is credit-based. We are on a commission-based business model, meaning that we offer marketplaces and where we act as a market maker, of course. But at the end of the day, our role is more like to be the broker that is actually consolidating all the offers of the market. And if we take back the example of the loan, this is really the simple example here. You as a customer, you absolutely do not care if your loan is provided by Bank of America or Lending Club, right? What you care is that all your criteria are matched and that you get the best deal out of it. And what we do here is exactly that. We aggregate the offer of the market and we systematize it on the marketplace. And whatever comes on top is always the best deal for you. But again, those marketplaces are open. That means that if you're still unhappy with what you've been proposed, you can create your own deal and let the other members subscribe into it. And that's really, if you look at it more or less, what the Lending Club is doing. Yeah. So we actually aggregate all the offer, but as well as leaving the opportunity for anyone to create their own deal. And at the end of the day, they are happy. People are happy in this thing because, of course, they get a better yield that they have at the bank otherwise, when they invest in that type of assets. But there is one big drawback, which is, of course, liquidity. There is no secondary market when you participate in a crowdfunded loan on that type of platforms. You're locked in your investment up until the deal matures. Now, with tokens, you instantly have on the second day that we organize, of course, centrally within the bank, but also anywhere else, you automatically have a secondary market for you to participate and potentially to cash out if you need your money back to make another investment.
Very interesting. Now, security tokenization has been a huge topic moving forward. How much is MtPelerin involved in security tokenization, and have you done a security token offering yourself or have coins integrated into the platform?
Yeah, sure. This is at the heart of the bank. Yeah, so the entire bank is going to be on-chain in the form of tokens, meaning that we had to actually come up with a framework that would work in terms of compliance for the regulators, right? So the idea was to be able to retrofit all the existing regulatory rules into the blockchain with a simple rule engine. So we have a list of rules, a rule engine, and a user registry. And the combination of all that allows actually pretty much everything. Yeah. So really, it's extremely simple to restrict the transferability based on different factors. So it could be, for example, you're an accredited investor, and this product is only for accredited investors. In Europe, we have rules such as MiFID as well. So we need to make sure that your risk profile, that you can buy on a product that are adapted to your risk profile, etc., etc. And this rule engine allows exactly that, to restrict the transferability of different tokenized assets based on a set of rules. Yeah, and that's really what we do. And of course, in order to prove that, last year we did an STO, but a very specific one. So the idea for us was really to bring certainty to some kind of protection, some kind of level of protection for the investor. Because at the end of the day, if you look at it, those STOs, the way they are structured today, most of them, they are structured in the form of private contractual agreement. Yeah, so they will share with you some future cash flow. They'll grant you some kind of consultative voting right, that kind of thing. But at the end of the day, it's just a private contractual agreement, and you're not that much protected, because if you read properly those contracts, at the end, there is always this little line that says that at some point in time, they can repudiate this contract and do something different. So what we really wanted to do here is to incorporate the share of our company into tokens and to make the token holder being a shareholder. And that is actually very important because that's what we achieved. And now all our token holders are shareholders, therefore they're protected by Swiss law and not only by a private contractual agreement.
It's amazing, Arnaud. Great work on the project so far. Now, are you guys looking for investors, more developers, or more partners? And how can they get a hold of your company?
Yeah, so we are, of course, in the recruiting phase. This is the biggest thing for startups, I guess, finding the right talents that fits within the team. So, of course, we're always looking to hire clever people. We're also in the fundraising. We will start very soon the fundraising, but that will be completely private. We will not involve the crowd. So, of course, we need to capitalize the bank properly according to FINMA's needs. And for that, we will find strategic partners to work with us.
Amazing. And how can they learn more about MtPelerin?
Well, they can learn more by just going on our website, subscribe to our newsletter, and they can even contact us anytime.
Awesome. Thank you so much for your time, Arnaud Salamon. That's all the time that we have today. But all of the best on your project. Sounds like you guys are well on your way to success. And I wish you good luck moving forward. So thank you so much for your time.
Thank you for having me.